A stock, what is that? Costing rupees 50, pays no dividend. 50 rupees ittante. The possible prices, they are given the possible prices. It may go to from 50 to 60. What is the probability? 0.1. 65 ಹೋಗ್ಬೋದಂತೆ. What is the probability? 0.2. Like this, they are given some probabilities with and even the expected price. You have to find out what? Written. We have to find out written on this. Then probability. Correct? So don't write until I say. You should understand this. See, they may give different kind of problems. Now let me solve this. See, make you understand. In this question what has been given? One is expected price. It may go from 50 rupees to 60, 65 and so on with the probability. So we need to find out. The first step is written. Okay, how to find out written? How to find out written? Prices are given. Written is equal to change in the price, right? Change in the price. So first one, what is the amount they are given? 60. Change in the price from its original, divide by original price into 100. That is 10 upon 50 into 100. How much? 20. 20%. Now please listen. Which are the columns you'll get? I'm just erasing it. Okay. Ri, probability, then what? Ri into probability. Next column. Ri minus E of R, then Ri minus E of R whole square, then what? P into Ri minus E of R whole square. So how we come to know that we'll get this many columns? Because we know the formula of standard deviation is square root of summation P into Ri minus E of R whole square. We know this. ಇದು ಬರಬೇಕು ಅಂದ್ರೆ ಇಷ್ಟು ಕಾಲಮ್ಸ್ ಬರಬೇಕು. Very simple. Correct? Shall we go? Then Ri. The first one is 20%. So either you can write in decimals or directly 20. No problem. I repeat. 20% we know that. We can write directly 20%, or even we can write instead of 20%, we can write Abhilash 0.2. 30%. Next 40. Next 50. 60. Done. Gotaita. Probability which is given in the question, please let me know. 0.1, 0.2, 4, 0.2, 0.1. Multiply 2, 6, 16, 10, 6, 40. So E of R is equal to 40. This is the written. Ri minus E of R. 20 minus 40. Minus 20. Minus 10. 0. 10. 20. Square. 400. 100. 0. 100. 400. That is okay. Then probability into this 0.1. 40. Next 20. Next 0. Next 20. 40. Total. I am erasing this. 120 na? Right. So the formula is of standard deviation square root of summation P into Ri minus E of R whole square. That is standard deviation is equal to square root of 120, which gives 10.95. That's it. These are the two answers. The first question was, what is the first question? Find out the expected return. So what is the expected return? 40. Find out the standard deviation of the returns. What is standard deviation? Very, very simple. Any doubt? Shall I proceed with the next question? Measures what? Market risk. Correct. Beta measures, which is also called as systematic risk. Beta measures, I am making you bad. Come on, tell with me. Beta measures, it is also called as. So what beta measures, which is also called as. What beta measures, which is also called as. So as per beta. So beta measures, which is also called as. And now tell, which is good as per the beta. So what should be the conclusion? Are you understanding what I'm saying? So what is this? 0.8 plus 0.8. If market moves up, it also, for example, 100%, it moves up, then the return on the stock A will be 80% increase. Negative idre, market if goes down, this scripts rises. Negative. Clear? And this is 120% relation. If market goes up for 100%, it goes up to 120%. Stock C. That is the meaning. So which one is good? Stock C. Stock A. See, always I as an investor, I want that to be very independent of market. Very independent. See, negative. I don't want to go with stock B because it is negative. Market is moving up, it is going down. Negative. I don't want to go with this. So this is a little more volatile. Volatile means what? So I choose stock A on this. A little stable. Tandem. It should be always beta of a stock should be always nearing to 1. Nearing to 1. What is the meaning of beta is equal to 1? Market ಹೆಂಗೆ ಮೂವ್ ಆಗುತ್ತೋ ಆ ಸ್ಟಾಕ್ ಹಂಗೆ ಮೂವ್ ಆಗ್ತದೆ. That means something, it is tandem to the market. So beta always it should be near to 1. So you can also choose stock C if you are willing to take more risk. No problem. You can write the, but choosing stock B is not advisable as per the beta. Is it clear? Any doubt? Clear? Shall I go with the next? What is the next? Correlation with market. This is nothing but beta only. But they are given in a different parameter. Correlation. 0.5. Correlation with the market means what? Market measurement. 0.53 minus risky 0.7. So always it is near to 1 is good. So go with stock C. On the basis of beta, choosing is stock A is a better, standard deviation stock B, and correlation with market. Any doubt? Understood? You should write down on your own words. Okay, later you can write down. Okay, what about this? The recession wave swept across the economy. Okay, up to what time I have a class? 10:25. Okay, the industry sector is at its low. The stock prices are its bottom level. Market recession aitante. The investor feels that the price cannot fall further. Matte thala hogalant. He wants to enter into the market and buy 2 securities. he has the following details. Which are the two securities you are going to suggest as a investor manager? Deep discount bond yields is 4.5%. Analyze this, analyze and state why we should take certain securities and reject others. Among four, stock A, stock B, stock C, stock D, you need to suggest two on that. With reason. Tell me which one you are going to choose. On the basis of alpha, beta, average relationship, and also standard deviation. Standard deviation measures what? Risk. Beta measures what? Market risk, and also, okay, as per the standard deviation, which one is good? Stock C? Sure, less standard deviation. Very good. Then, as per the beta, C. Correct? Very good. Then, average relationship, that is correlation. C and A. Okay. Then, as per the alpha, again C. So, first stock is C is good. Next one. Stock C is good. Next what? I feel stock A. Correct? Our understanding? Is it clear? As a investment banker, I'll be suggesting this guy stock A and stock C. First preference stock C. Second preference stock A. Stock A. Any doubt after this? Clear? Although you need to see in your opinion which one is having high systematic risk. ಇಲ್ಲಿ ಏನು ಫೈಂಡ್ ಔಟ್ ಮಾಡಬೇಕು? ಬೀಟಾ ಕಂಡುಹಿಡಿಯಬೇಕಾ? ಹೌದಾ, ಬೀಟಾ ಕಂಡುಹಿಡಿಬೇಕಂದ್ರೆ ಏನು ಬೇಕು ನಿಮಗೆ? ರಿಟರ್ನ್ಸ್ ಬೇಕು ತಾನೆ? ಇಲ್ಲಿ ರಿಟರ್ನ್ಸ್ ಎಲ್ಲಿ ಕೊಟ್ಟಿದ್ದಾರೆ? ಪ್ರೈಸಸ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ಯು ಹ್ಯಾವ್ ಟು ಫೈಂಡ್ ಔಟ್ ವಾಟ್? ಪರ್ಸೆಂಟೇಜ್ ಆಫ್ ಇನಿಷಿಯಲ್ ಪ್ರೈಸ್ ಅಂತ ಎಲ್ಲಿ ಕೊಟ್ಟೇ ಇಲ್ಲ. ಡೈಲಿ ಕ್ಲೋಸಿಂಗ್ ಪ್ರೈಸ್ ಕೊಟ್ಟಿದ್ದಾರೆ. ಹೆಂಗ್ ಫೈಂಡ್ ಔಟ್ ಮಾಡಬೇಕು? ನಾನು ಹೇಳ್ಕೊಡ್ತೀನಿ, ನೀವು ಟ್ರೈ ಮಾಡಿ. ಓಕೆ, ಗಮನ ಇಟ್ಟು ಕೇಳಿ. ವಾಟ್ ಆರ್ ದಿಸ್? ದೀಸ್ ಆರ್ ದ ಕ್ಲೋಸಿಂಗ್ ಪ್ರೈಸಸ್. ಸ್ಟಾಕ್ ಎ, ಸ್ಟಾಕ್ ಬಿ ಅಂಡ್ NSE. ಆಯ್ತಾ? ಹೆಂಗ್ ಫೈಂಡ್ ಔಟ್ ಮಾಡಬೇಕು? ಫಸ್ಟ್ ಬರೋದಿಲ್ಲ, ಫಸ್ಟ್ ಡ್ಯಾಶ್, ಸೆಕೆಂಡ್ ಬರ್ತದೆ. 25 minus 24 divided by 24 into 100. ಅದಕ್ಕೆ 1% ಬರ್ತದೆ. ಅದು ಇಲ್ಲಿ ಬರೀತೀರಿ. ಅರ್ಥ ಆಯ್ತಾ? ಇಸ್ ಇಟ್ ಕ್ಲಿಯರ್? ರೈಟ್? 25 minus 24 divided by 24 into 100. ನೆಕ್ಸ್ಟ್ ಏನು ಮಾಡಬೇಕು? 23.63 minus 25 minus 25, 24 ಅಲ್ಲ, ಪ್ರೀವಿಯಸ್, minus 25 divided by 25 into 100. ಅದು ಸೆಕೆಂಡ್ ಬಂತು. ನೆಕ್ಸ್ಟ್ 23 minus 23.63 minus 23.63 divided by 23.63 into 100 ಮಾಡಿ 0 ಬರ್ತದೆ. ಹೌದಾ ಇಲ್ಲ? ಸೊ 0 ಅದಕ್ಕೆ. ನೆಕ್ಸ್ಟ್ 25 minus 23.63 divided by 23.63 into 100. ಈ ತರ ಎಲ್ಲದಕ್ಕೂ ಮಾಡ್ಕೊಂಡು ಹೋದ್ರೆ ಏನ್ ಬರ್ತದೆ? ರಿಟರ್ನ್ಸ್ ಬರ್ತದೆ. ಸೊ ಫಸ್ಟ್ ಏನ್ ಮಾಡಬೇಕು? RI ಅಥವಾ RA, ದಿಸ್ ಇಸ್ RM. ಇದನ್ನು ಹಂಗೆ ಮಾಡ್ತಾ ಹೋಗ್ಬೇಕು. 862.46 minus 857.07 divided by 857.07 into 100. ಪ್ರತಿ ಒಂದು ಮಾಡ್ತಾ ಹೋಗಿ. ನೆಕ್ಸ್ಟ್ ಇದನ್ನ RA ಅಂತ ಕರಿತೀರಿ, RM ಅಂತ ಕರಿತೀರಿ. ನೆಕ್ಸ್ಟ್ ಇದು ಎರಡು ತಗೊಂಡು ಬೀಟಾ ಫೈಂಡ್ ಔಟ್ ಮಾಡಬೇಕು. ಸೊ ಬೈ ಯೂಸಿಂಗ್ ದಟ್ ಫಾರ್ಮುಲಾ, then you need to find out RB with RM individually. Then what? On the basis of return, which company stock will you select? You have to find out also return. Right? Average return. Add ಮಾಡೋದು, ರಿಟರ್ನ್ ಫೈಂಡ್ ಔಟ್ ಮಾಡಿ, ಆ್ಯಡ್ ಮಾಡಿ, ಆವರೇಜ್ ಮಾಡೋದು. ಇಲ್ಲಿ ಪ್ರೊಬಾಬಿಲಿಟಿ ಇಲ್ಲ. There is no probability. Simple. Is it clear? Done? Try ಮಾಡ್ರಿ. It is there in a textbook. Security Analyst Portfolio Management, right, by Punitavati Pandian.